Today's day number 5757 of the $1,000 account challenge, and we are up $74 in the account, or 0.74% of the total portfolio balance. Now, if you don't know, my name is Gates. I'm taking $1,000 and I'm day trading options to see how far we can grow this account. By the way, special shout out to this member saying that this is their most consistent week of their career so far. Doctor of the Future. Monday, 14%, Tuesday, 8.4%, and today, 4.5% of the entire portfolio growth. Thank you for your great teaching, and congratulations on your most consistent week so far. What I just replied to that was, do not forget to pay yourself. So I took one trade today. We have a Fed interest rate decision this afternoon, so I made the decision to mitigate my risk and size down. Plus, I traded a stock that was cheaper with contracts that were cheaper, so it's volatility on top of volatility. So in an effort to mitigate risk, I stayed sized down on top of the double volatility. Plus, with the looming news this afternoon, I really didn't want to take too much size on because market conditions today have been, up to this point, less than favorable. So straight off of the day trade watch list, we had DKNG as a long idea above $44. This is a setup on the daily that is shaping up a formation known as a bull pennant pattern. The formation is identified as a series of lower highs and higher lows all converging to a point. Now, yesterday I liked DKNG, but the opening gap down kind of took it out of play. So yesterday when it recovered and closed very close to, I'll move this to the 5-minute time frame. Yesterday when it closed up near the peak of the day prior, I thought that this offered breakout potential because it would be breaking the pattern on the daily time frame, which is here's your high, here's your lower high, here's your lower high. The moment that DKNG makes a higher high, it is essentially breaking out of the pattern on the daily time frame, which offers us topside potential. Moving to the 1-minute time frame, we get a break of the trigger level at $44 almost immediately right at the open. Nice large run up and then a pullback. You know what we do here? We do not chase this move up. We do not trade in the first 5 minutes. And when we were offered a dip opportunity fairly close to the trigger level, I went ahead and pulled the trigger on this. Now, as we're getting the pullback in the alert room, I tell you, DKNG worth watching. DKNG loaded my contracts. No position yet. And then I tell you, contracts are cheap and volatile, so be careful if we take an entry, mind your sizing. Then I go on to tell you that DKNG, I took the entry long, 9:36 a.m., time stamped for you, give you the contracts, give you my fill price, and give you my stop loss, a break under 44.2. I even go one step further here and re-mention that you should be careful with your sizing as these contracts can move fast, and they did. So after taking our entry with the stop loss placed at 44.2, it's just a matter of holding on to the trade and letting this thing work. We get a pop move up right away, a bit more of a pullback into consolidation, and then eventually the high of day run. From here, it's just trade management. I'm telling you, DKNG now up 10%. You can take profits or hold. I'm holding. My sell target is at 69 cents at 20%, and then now up 20%. DKNG, remind you of the contract, fill price 57, now at 69. I closed it out there. In this same candle, I got filled at 20%. Those contracts ran up to highs of 40% profits on this same candle. I haven't looked back at those contracts to see where they're trading at now, but my assumption would be they're probably close to 60 or 70% profit. So while this is a higher quality setup and something that we could have potentially scaled out of to get more profits on, I did not make the decision to scale out of it because I wasn't in with that much size to begin with. Typically on days where you have interest rate decisions or you have looming news or you have larger companies reporting earnings in the afternoon, you might see a hesitant market or a slower market where things tend to chop and consolidate rather than give you directional runs, as everybody's just staying patient, waiting on the news to drop before making a move in the market itself. So take note of this because these are days where you'll want to size down in an effort to mitigate the risk. Even if it means that you make a little bit of money or you lose a little bit of money, it's still better than taking on a whole lot of risk and having that big red day that we all try to avoid. So that's it. That's all that I have for you on this trade for today. We were able to make back the loss from yesterday, $74 gain on the day. Thank you so much for your time. Press that like button for me if the video has helped you out, and consider subscribing to the YouTube channel as well. It's just the best way to support me as a content creator. Again, thank you for your time, and I will see you tomorrow when we continue the $1,000 account challenge. Cheers.